Good evening. This is the Elliott wave update for the S&P 500 for Monday, June 6th, 2022. Again, not much to be adding to our current analysis or prognosis of what direction we're going to be heading in. The market, in my opinion, continues to be in the process of tracing out a minor wave 2 counter trend correction. And still, I believe, remains within a B wave. And if that is the case, we continue to run the potential that the market still has a little bit more downside to do. Thus far, though, for the last 1, 2, 3, 4, 5, this being the fifth session, 1, 2, 3, 4, yeah, fifth session, where we're stuck between the daily 50 and the daily 20. And right now, the daily 8 and 20 are basically just kind of joined at the hip and sitting at basically this exact same place. The 8's a little bit above that 20, but that's not producing any action outside of the daily. So breaking it down and looking at the hourly chart continues to show we are just forming another possible wedge. And that could then spell that the S&P is still in that wave 2, and that this is wave A, and this is all tending to be a triangle. We can draw down, we can bring it up, and it could be a contracting wedge. And if that's the case, I would gather that the outcome will be a push higher. It'll blast out of the triangle, if indeed that is a triangle, and move higher. And that would then put us into where I believe this wave C would be enacted. It would be underway. Now, on the hourly chart, we're being held to a rising 200, still has an upward slope, which keeps that C wave alive, which keeps the upside still in view. And we didn't even get, we sort of got within 7 points of it today. Stopped, rallied. So again, not very much to be adding here. There could be an A, a B, and we get a C, or it could be this triangle pattern. It's all kinds of things kind of going on that we need to just keep in mind. Again, though, if it is just a regular old ABC down, that would be looking at the daily and then coming back down to the hourly chart. A, B, and then a C wave down. So we could have A, B, C, B. No, that's not right. Excuse me. A, B, and then a C. And if that's the case, let's just take a peek at running Fibonacci from there, extensions. So if it's a C wave, let's kind of put some parameters around it. Take a look at this. We have, again, that hourly 200 sitting right at 4,100. And what we need to see, and it should occur, is a break below 4096 to put in a new low below wave A to complete the wave C. We do have a fib level, which would be where wave C would be equal in length to wave A, and that would be at 4074. So if this decline and this decline would be equal, that's going to be the level. Now that would include a break below the hourly 200, but I think it could be quick, go all the way down and come all the way back. So we've got a couple of figures this week that might just cooperate and let that happen. But then again, overhanging all of this is this fanfare that's going to kind of start to creep in to a week from this Friday being the June expiration, which is being thought now and reported as likely being larger in nature as to what settles than the March quarterly expiration cycle. And that one we saw 3.2 trillion. So this one's being estimated at 3.6. So very, very large, a lot of positions coming off. And then we'll see what the market wants to do beyond that. There's all kinds of news out there. There's all kinds of talk. There's all kinds of banter. There's all kinds of things that people are latching onto and are going to be absolutely, it's going to do this. This is what it's doing because so-and-so and so-and-so and so-and-so are saying the Fed's going to do this. The Fed, it's a lot of givens to put that all into place to see the S&P head back up towards 46, 47, 4,800. I do not see that. I see that we're still in this larger decline and we're still within a process of tracing out an intermediate third wave down. And we're just in the second wave. And then what follows is that very strong decline. What works against all this is that this may have been 4202, which has yet to even be equaled or broken to the upside, could possibly still be the completion point for that minor wave 2. And if that's the case, then what we got going on here, maybe a 1, 2, and now we're starting in the third. Now, if that's the case, folks, here's what we're going to have to look at to give us some confirmation that that's actually what's happening. So what I attempt to do during these updates is to give both sides of the picture and what to look for if the market indeed is going to go in that direction. So upside, it needs to start breaking back above. These moving averages get above that hourly 50. So right now we got the hourly 20, the hourly 50 sitting right on top of each other at 41.35-ish. And he said, break above those, break above 41.46, break above 41.68, break above 41.89, and then break above 42.02. So it's got a lot of points that it's got to get past to prove we're going up to finish the minor wave 2. My thought process, I think we go down first to complete the B wave, and then we have enough power to push up through all of these moving averages, because whatever's going to come out at the end of this week is CPI and other figures may support that. We'll have to wait and see. So again, I encourage at least those who are viewing my work and are trading on a daily basis to stay open and try reading the price action. Try just, coming in, you're making your move, you make your money, and you're done without being bullish or bearish. So that way you stay open to look for what the market may be telling you where it's going to go. Downside now would be that we continue lower, we break below that 200. That in and of itself, because it's held for quite some time and hasn't even been challenged since back last Thursday, it got challenged. But since then, did not get challenged on Friday, did not get challenged today. So it continues to hold. Now getting a little bit flatter. So it's sitting right at the 4,100 level right now. I think if it breaks, it gives a little bit of flurry of everybody jumping on. We're going down, gets down to 4,074, turns and begins that C wave rally back up, and ultimately back out to the daily for this one, ultimately getting itself back above all of this resistance, getting above 4202, getting above 4220, and heading up towards 4316. So anywhere really 4300 to 4320. We have the daily 200 sitting at 4345, I'm going to call it. And I think that will be strong enough to contain an upside move of a minor wave 2 proportion. So that's kind of the story. Nothing really to change. We remain on inside alert. And that doesn't give us a whole lot of opportunities, although we did have plenty today. There were some decent moves, and both in the S&P and in the NASDAQ. And so trading was okay. We had to wait. You had to keep yourself awake, but they did end up occurring. So continue to use the moving averages, which right now we're locked on the daily chart. We're locked between the 50 and the 20. So either way, if a break higher breaks the 50, it should produce some decent trade. If it's going to break down and break the 20, it should still produce some decent trades. We're going to go on that and continue to follow moving averages and the fibs and the Elliott, and have a great trading day tomorrow. And our next update will be on Tuesday, June 7th.